Moving from there on, Happiest Minds, that's a stock that is in focus as well in today's day of trade. Now, clearly, it's the BFSI segment that has seen growth. Healthcare is seeing some bit of a slowdown as well. That stock is down almost 1.4%. What's interesting over here is in terms of the guidance that the management had given for FY25, they had said around 30 to 35% constant currency growth in terms of the top line. Now, clearly, when we spoke to the management as well, what they've indicated is that they are trying to meet the 30% revenue growth guidance. So that's going to be interesting, Tamanna, because if they are not able to meet that 30%, they will be missing the revenue growth guidance at the lower end as well. Let's quickly hear out what the management had to say as well.
We have shown a year-over-year growth of about 28%. In rupee terms, it's about close to 30%. And in dollar terms, constant currency, about close to 1%. So yes, the street may have been expecting slightly better numbers on the constant currency growth, which we have shown at about 1%. But the fact of the matter is here, this time we had a fair bit of furloughs and holidays hitting us this quarter. After the acquisitions, we have grown deeper into BFSI as a segment, and we are seeing that BFSI has pretty weak Q3, or the October, November, December quarter tends to be weak given the way the holiday structures, the statutory leaves, and those things happen. So we are coming to grips with that, but despite all of that, we took some revenue enhancement measures, and we have been able to grow at about 1% in dollar terms. All the other metrics of EBITDA, or be it operating margin, we have performed ahead of what typical expectations were, and EBITDA number is at 22.1% for the 9-month period, which is ahead of the guidance that we gave for 20 to 22%. So in all, revenue for the 9-month period and for the 3-month period, we are very close to the forecast that we had given to the market, which was 30 to 35%, and then we subsequently corrected saying 30% is what we are going to target, and we are reasonably close to that. Next quarter, looking a little into the next quarter, we have closed this acquisition of customers and customer relationships of GADS Technologies in the Middle East market. We are looking to consolidate that, and that's almost 100% BFSI and infrastructure application services, application maintenance business. We are looking to grow into those accounts, cross-sell, upsell, and consolidate that starting immediately, almost immediately, because some of them are our existing customers, and we also have a reasonably good presence in the Middle East. So the consolidation benefits should see trickling in quite early. So we are looking at that and the organic growth in Q4 put together, trying to, the attempt will be to make sure that we try to reach the 30% number or hit that to the extent possible.
Right. That's an interesting one, because in the previous quarter as well, when we were looking at the 30 to 35% year-on-year constant currency growth for FY25, the ask rate in terms of the second half of FY25 was around 5.2%, right? This quarter, if you see in terms of the number, it's still on the lower side. Do you think you will be able to make up for that number, even to achieve the 30% guidance?
Yeah, so that we did two things. One is we tempered the 30 to 35 to 30%, because, we thought we will be able to consolidate the acquired companies from the beginning of the quarter. For various reasons, it slipped, and we could only get about 40 days of revenues from both companies. And that's a significant number. So taking that into account, we said, let's not go too far away from what we have said, but let's keep 30 as the guideline number, the forecast number, because I was very clear that not to use the word guidance, maybe semantics, but I was sure that we should, these numbers have to come together, and it was too early. But we said we'll now try to achieve the 30% number. Compared to the 30% number, we are at about 25%. And if you look at it, Q2 and Q3, both these quarters, we have done 28% QOQ. So yes, we have missed the 30% by about 2%. And the attempt is to make sure that we try to cover up for the gap to the best extent possible. But in transparency, I think touching 30 may be slightly difficult. but we will be there in terms of 27-28% in constant currency.
Right. And in terms of the EBITDA guidance, I mean, it's 20 to 22% with other income. Current one, we are at around 21.7. It was interesting to see how in the previous quarter we were somewhere in that 28-29% kind of a range. Did this quarter actually see any impact on the back of wage hikes in the leadership team? Because that was something that we were watching out for.
I would take the reference of the previous year. We were at about 24.2% in the same quarter. 9-month period, 24.7. You bring out a very interesting point. One is, we have made investments into generative AI, GBS business, which is at about 24 crores, running at about 26 to 30% utilization. So I have said this in the last quarter itself, that in the first half of the year, we have made investments of about 1.5 million, approximately about 1.5 million. If you consider that similar kind of an investment going into Q3, it would be about 2 to 2.25 million. You add the new sales engine that we have added. That's something that we did, and that's an additional cost of about close to $250,000. The verticalization of the business, while it's supposed to give us a lot of impetus, it also adds some bit of costs. But keeping that aside, and the investment that we have to make into Artha Banking to make sure that it makes sense for the Indian markets and the other US markets that where we are going to take it into, we have made close to $2.5 to $2.6 million of investments in the financials up to the 9-month period of Q3, FY25. And just for that, and we are back to the 23-24% EBITDA, Hiral. So it's just investments that we are making. It's a startup. GBS is a startup within Happiest Minds. Artha Banking is the non-linear growth platform that we have acquired from Pure Software, and we are taking to new markets. The new sales engine is an overlay cost that we have taken to go deeper into existing relationships and get those new customers into which we can sell our services and offerings. So these investments take a little bit of time, but from a P&L standpoint, you can't defray these costs and match them with the revenues. We're getting hit on that account. That plus the compensation increase, which has been fairer than most of the other peers and market participants, has had an impact on our financials.
Okay, so with regards to segments that will lead you to achieve your guidance, what are you banking on? Because CV as a segment has been slightly muted, not only for you, but across the industry, right? People have been banking on the BFSI space right now. What is going to be your strategy?
Just look at our performance in Q3 as well, Hiral. You'll see that BFSI has really led the way. And so I would say that, and given the leverage we get from Pure Software Aureus, the capabilities, the customer base, and the Artha Banking platform, I would say BFSI would be an area that we would be looking at to really help us accelerate our revenues. Another vertical or segment that has really come up well in the last year and a half is healthcare. We started reporting healthcare just a year back. And if you see, it's already around 14-15% of our revenues. And if you see on a year-on-year basis, we've demonstrated pretty good growth. A lot of interesting trends in this segment around bioinformatics, around newer type of medical devices, confluence of software and hardware in terms of various types of medical devices. And these are areas that, and overlay of analytics. So these are areas that are of strength to us. We have hardware practice, we have a very strong analytics AI practice, and healthcare vertical. That I would say is the second vertical that we would be looking at. And high tech, we're beginning to see some signs of, at least for us, if you see again, high tech has done well. And I think some of the strategies that we've been implementing of also targeting well-funded late stage companies along with the larger tech players is beginning to show some dividends. So I would say these are 3 segments that we will be looking at helping us out during the quarter and probably into next year as well.
And with regards to the 500 crores that you did raise in July 2023 via QIP, how is the utilization on that front? Has it been for the acquisitions as well as on the Gen AI side? And if so, what's the kind of ramp-up plan that you have, and are you expecting large deals there?
The 500 crores that we had raised was for a combination of acquisition and meeting certain working capital and other requirements. So we are on target to meet those utilization targets set for us. But overall cash standpoint, we have deployed close to 800 crores in the acquisitions that we have made and the earnouts of the previous acquisitions. We are close to about 700 to 800 crores have been deployed. Despite that kind of an outflow, we still continue to carry about free cash balance of upwards of 500 crores. This I'm netting off, some of the overdrafts and received loans. But we are carrying about 500 crores in our books. That's a reasonable amount of cash balance for a company of our size. That's what we believe. But we should be able to, manage smaller acquisitions like the recent one which we did of the gas business in Middle East. Those are possible from our cash chest as well as our internal accruals. But if we want to do larger ones and acquisitions of, let's say, more than $50 million in size, we will have to look at options to raise capital or debt to fund those.
Okay, so from here on, growth will be driven inorganically or organically?
We drive. We don't split our growth on the basis of organic and inorganic. It's the strategy is to add capabilities, competencies. Like we said, we have added to our verticals through the last 4 acquisitions. Pure Software was largely, BFSI, healthcare, high tech. Aureus was largely BFSI and healthcare, whereas Macmillan was into edutech, and the most recent one, which we disclosed of consolidation of the Middle East business, is into BFSI and infrastructure business. So if you look at it, it's both fuel for further growth and consolidation of our existing capabilities and ability to sell it to those new customers. So, without splitting it, it will be a combination of both organic and inorganic.
Okay, and with regards to the synergies that you're seeing from Pure Software Technologies, what will that look like?
So, if you look at the 3 verticals that Pure Software has customers in, one is in BFSI, more so in banking and financial services. Second is healthcare, and then they have some customers in the retail and high tech space. The 2 areas that we are seeing a huge leverage or synergy is in healthcare and in BFS. And in BFS, the Artha banking platform that we have is something that our sales team is taking to in India into some of the banks, and we are in advanced stage of discussion with a couple of banks out here. There's a good leverage that we're getting. We're also looking at how do we use some of the components of Artha in the insurance space, which is a subsegment that Aureus is very strong in. At the same time, Pure Software has been leveraging some of our GenAI, IMSS, and analytics capabilities. If you see a couple of the wins that we've reported in our press release, they talk about a GenAI use case for one of PureSoft's BFS customer. We also talk about IMSS, a deal that we've done for a healthcare customer of PureSoft. And with Aureus, again, we have similar leverage that's happening because our healthcare capabilities is something that they're taking to a couple of customers that they have in the healthcare space. And at the same time, for a couple of our insurance prospects, we've been able to leverage some of the senior domain experts that Aureus has in establishing our credibility. So I think overall, the synergies are really working out well, and we feel very excited.
Thank you. I mean, so that's the management in terms of happiest minds. Clearly, there are pressure points, but in terms of the guidance, that is going to be crucial. Constant currency, 27-28% is what they are, reducing their expectations to versus a 30%. And before that, the range was around 30 to 35%. And that's what is putting the stock under pressure. But coming back to our Titan, let's